Payments company Adyen released a trading update yesterday and the stock jumped about 10%, but shares fell back and they're still up only 6% this year. At the latest share price, Adyen now has a market value of 48 billion euros. The company has 3.4 billion of working cash on its balance sheet, which means the enterprise value is 44.5 billion. Adyen stock has not delivered huge gains this year, even though the company is performing extremely well. Total revenues are up 21% on a trailing 12-month basis to 2.2 billion, with over €1 billion of ebitda, €1 billion of net income and 931 million euros of free cash flow. That means Adyen stock is currently valued at 20 times sales and 48 times earnings. That valuation sounds expensive, but Adyen's full tech stack and disciplined execution deserves a premium. In the most recent quarter, the company delivered 20% growth with increasing diversification. Adyen's digital payments business grew 10% to 335 million, unified commerce grew 32% to 195 million, and platforms grew 50% to 69 million. In fact, the number of platform customers processing over $1 billion in sales on Adyen has seen a dramatic increase of 24%. Perhaps most impressive are the company's margins. Over 50% of Adyen's revenue flows straight to ebitda, and almost 90% of that ebitda gets converted to free cash flow. As a result, cash quickly builds up on the company's balance sheet. Over €1 billion has piled up over the past 12 months. It would be nice to see the company buy back some shares with this cash. And Adyen also delivered strong guidance, expecting continued growth and improving margins thanks to operating leverage. On the negative side, there's no doubt that Adyen operates in a competitive environment. Established rivals include PayPal, Stripe, WorldPay and Shift4. Meanwhile, Fiserv's stock just plunged 44% after cutting its outlook. The market seems to be confused right now about the future of digital payments and who the winners and losers will be. But Adyen's land and expand strategy is working and the business is showing little sign of weakness. In addition, the company's modern full-stack technology should be well placed to deliver agentic commerce. To value Adyen, I assume the company delivers 20% annual revenue growth for the next 3 years with a 47% free cash flow margin. In that scenario, free cash flow gets to 1.78 billion euros and a 36 times multiple takes the market cap to 64 billion. Account for cash on the balance sheet and some stock-based compensation and I get a price target of 2278, which works out to an investment return of 14.6% per year. That seems achievable to me, which is why I rate the stock a solid buy. But these are my personal opinions, not financial advice, and I may buy Adyen stock in the near future. For more investing videos, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.